All right, hi there, guys. A very big welcome to you guys for the beginning of the new week, but then it's the last week of the month. So it's the week beginning 26th to the 30th of April 2021. Welcome to the Monday's Bretton webinar. So it's a Monday's week ahead webinar. So I want to thank you guys for attending this webinar today. I have got all recordings as well will be posted onto the YouTube page. Now, just a little bit of changes has actually happened with regards to certification programs by Bretton. So it's been, I'm proud to say that it's been accredited and certified by the London Academy of Trading and Investment. So the website is www.ati.london. What that means is that for most of the certification courses will actually be governed, evaluated, and monitored by the London Academy of Trading, or they are called ATI, based in London. And basically, they work with various accreditation bodies as well, and also very big top traders. And these are people that the ATI works with in collaboration, so they can actually get their evaluative ideas, and also they would actually monitor all the syllabus that I produce as well. So in other words, at Bretton Financial Trading Academy, we'll have the certification courses as well. So the trainings and the subscriptions, they are different. They're not the certification courses, but the certification courses are collaborated or accredited by the London Academy of Trading and Investment. So that also means that for anyone who are interested in having their training, and then that training would actually be accredited or recognized internationally. So you can put that onto your CVs as well, or for anyone who wants to put it onto their CVs, it's an internationally recognized certificate. For students as well, I collaborate with a lot of universities. So what that means is that, I mean, we've got students graduating from college or even universities, and they would like a referral, and I'll be happy for providing them with referrals. So if it's your children as well, and they want to go into the banking and finance or business related fields, and they need a referral after they have actually completed the certification program, I'll be more than happy to be their referral or their referee. So that's basically what I would like to announce. Okay, so that's it for now. For that small changes that has actually happened, would actually be bringing up Bretton Financial Trading Academy into a totally different level, because we will be providing companies as well, private companies, governments as well, and their staff and all that with proper certification programs. So it's not only Forex, it's investment topics as well, fundamental intermarket analysis, about brokers, education. So people can actually literally pick the right topics that fits them. Personal investing as well, gold investing. I'll be releasing a master class in physical gold and online gold trading. So that would actually be quite useful, I think, for a lot of people of all age groups to actually go on to a certification like that as well. So we'll present all these topics very, very soon, and let's get going into the markets at the moment. Okay, so let me just make sure that you guys are already admitted into the room as well. Yeah, everything's okay. Good. All right. So let me go back right now to the charts. We've talked last week a lot about a couple of pairs, GBP, AUD, I think, AUD pairs as well, Euro pairs as well. I've also mentioned a little bit about gold. So I want to talk a little bit more specifically about all these pairs, give you some trade ideas, because I'm expecting loads of movements. It's already picking up in terms of momentum, liquidity as well. So that is actually giving us a lot of hints, expectation that we can actually trade with movements. So we are not going to be waiting on our screen and see lack of movements. I don't think this week will be like that. This week will be more active, and we've got in the fundamentals docket, in the fundamentals calendar, or the economic calendar, sorry, we've got loads of data releases as well, especially middle of the week onwards, and we've got a lot of big, wouldn't say very, very busy, but we've got some from certain countries that would actually move the currency pair for that specific country, and also like as in for euro as well, we've got a couple of countries there that we want to look at in terms of the economic data. So let's get going with that. And I just, before we get into the pairs, before we get into specific pairs, entries, exits, stop losses, and all that, I just want to remind traders about what would actually be happening from now on and then until for the whole week, and what are the things that we need to actually keep in mind in terms of what have actually happened last week as well, and then coming into this week to create that catalyst, to create that momentum in the market. So one of the biggest data, I wouldn't say data, but event, a risk event this week is your FOMC meeting. Now, the FOMC meeting will ride along what didn't have actually surprised the entire market with last week, with a double tax on capital gain. So this is just basically taxes for the rich, and that is reaching about 44+% for the rich to be taxed. And the thing is that that has actually tumbled a lot of the equities and stocks market last week, and especially, this week, beginning of this week. And what we are end of last week and beginning of this week, we are actually looking at more impact of that onto the stocks, because we are also having earnings, meaning they will actually forecast, the returns and all that of all the stocks, as well as of now what is actually, have actually gone on in terms of the returns of all the major stocks. So this week we are looking at earnings season, and it's going to touch upon all the top, I think, 5 or 6 stocks, and they are called the FANG stocks, FAANG, something like FANG, so FANG, FAANG stocks will be announced. So the FAANG stocks are very, very important. They are also owned by the Swiss National Bank, because top 100 stocks of the US is actually owned 40+% of the top 100 stocks in the whole of US is actually owned by the Swiss National Bank. So there is some connections there with how the Swiss franc as well will actually be performing, but we'll get into that more detail later on into specific topics as well on intermarket analysis and all that kind of stuff. But then as of now, what you guys need to know is that in my opinion, it'll actually move the market a lot, because you've got the FANG stocks. FAANG stands for Facebook, Amazon, Apple, Netflix, and also Google. So that's why it's acronym FAANG. So you've got the FAANG stocks going to be announced in terms of its earnings, income potential, share holdings, all that kind of stuff. Basically, it's going to be benefiting all the shareholders as well to know whether or not we're going to be holding all these stocks again, whether or not we're going to pump in more money into the stocks, what are the policy changes coming in next, how does the US inflation will actually impact, how does Biden's taxes would actually impact all these companies and its stocks as well. Should I be still an investor with these companies? All these kind of stuff would go on. So it would actually be very, very important week, especially because it's the FANG stocks. So the FANG stocks, one of the most popular, biggest ones, as you know, it's all the big names there, starting with Facebook, of course, and then you've got Amazon, like I've mentioned, Apple, Netflix, and Google. So that's what FAANG stands for. Okay, all right, good. So that's earning seasons. We've got the FOMC meeting, really, really very important. So Biden, like I've mentioned, is actually double the capital gain taxes. But the thing about the capital gain taxes, it needs time to be approved. It's got the proposal already out, but then the approval stage is the next stage. So just the proposal side of it has already tumbled the market. So can you imagine what will actually happen next with inflation, employment figures, and everything else in relation to all these taxes proposal that has actually gone on. So what we are looking at is that now we are looking at the tumbling of the dollar as well, not not a big tumble, but depreciating in terms of price. But this should not actually be telling us that the USD will keep on falling, because we need to be very careful of where the support is going to be. So the major pairs, GBP USD, USD JPY, all the ones that has USD in it are called major pairs. So these major pairs we need to actually monitor and be very careful, and not to actually think that, okay, USD is weak, so USD with all other pairs are weak. No, we cannot do that at this time of the year, especially because everyone will have its own personality now. It will be even stronger that they will have their own personality. The reason is, if you combine USD with JPY, now JPY in terms of yen, they've got more emergency now. It's even worse. So the JPY would actually end up going up. Mainly because in Japan, as I've mentioned last week as well, the way Japan works is quite different. They start selling their assets when there is a problem within the country. So they've got 3 cities, Osaka, Japan, and Hyogo, I think, that they are closed, and the Japanese stock market as well is actually on a halt at the moment, because Tokyo is, really going crazy times at the moment. So the 3rd wave or the 4th, I'm not sure, of the lockdown, and it's declared emergency. So that is actually a very, very big plus point for the Japanese yen, because of all the shares being sold in other countries, even like in Singapore, US, and all that. The Nippon plant, the chemical plants, the car manufacturing places, they're all Japanese, right? Even in Malaysia, Singapore, you just name it, Takashimaya, everywhere. So they've got investments all over the world, and they would actually be selling their assets in times of emergency. So then you will see that the yen will actually be going up. So it's really difficult to have the US as well go up, USD as well go up at this moment of time. So it is having its own reason, of course, with what's going on in the US, especially with bonds again. So the bonds, the yield in terms of returns of the bonds have actually depreciated. So that is giving it a bit of a tailwind in pulling down the US dollar at this moment of time. So this is just generic. So we want to have a very generic play of the market of what goes on. And this is what's going on. US is actually on the downside. There is expectation for the gold, of course, to actually go on the upside. We've got the upside for safe havens like the JPY. So as you can actually see, when the corona happens, when there is a lot of crisis with the corona in Europe especially, and in UK, this is very interesting for you guys to know, because this is how the dynamics have actually changed in terms of safe havens. At the moment, it is improving in terms of corona news in the UK and also in Europe. So when it is actually improving, then the US dollar start to fall. Okay, so this is what I have actually monitored. Why? Because when corona cases happens in Europe and in the UK, USD starts to become a safe haven. So I want you guys to really, really take this in and also understand this from a generic perspective, but this is actually a dynamics that have actually changed. So we know about CHF and JPY to be safe havens, right? And also gold to be safe havens. But right now, when the corona news is playing about, you need to actually ask yourself, where is this big pandemic happening? If the big pandemic news and lockdowns and everything is actually happening in Asia, like now it's happening in Japan, USD does not become the safe haven for crises that happen in Asia. But when the crisis, especially corona we're talking about, happens in Europe and the UK, then you will see that the USD starts to go up and becomes a safe haven. So you need to understand that the safe haven appeal for certain currency happens for a certain kind of crisis in different countries, you see. So that is basically what you need to really be careful about as well. So this would also give rise to the CHF, in my opinion, if in Europe and in the UK has got this crisis, especially Corona, but anything that actually would be very, very risky, then people will put it into the safe haven. They will put it into the CHF, for example, all right? And then they'll put it into the USD as well. So when there is crisis in the UK and Europe, especially with Corona, you will see the USD going up. So now what has actually happened is things are improving already right now in terms of Corona in UK and also in Europe. So this is now giving some excuse for USD to drop, actually, because it does not need to function as safe haven for crisis at this moment of time in Europe and in the UK, especially in London. So this is what's going on roughly. So I want you guys to just have that sinked in a little bit. And basically, now we will then go into the heat map as well, and just to take a little bit of an idea of what goes on in the market. Just give me a second. I'm just going to close the door in a second. All right, guys. So there's a door banging, so I didn't want that to disturb our focus and my focus as well. So, okay, so at this moment of time, I mean, we've talked about AUD USD. There's a couple of pointers there. I just want to remove my video right here so that we can see the price as well. Okay. So we've mentioned, we've talked a little bit about price action and various others on specific pairs. We'll get back to that, but right now it's important for us to also go back to heat maps. We'll go into heat maps on both Forex early warning and also action Forex, just to get a bit of an idea on certain pairs that we need to pay attention to, and we can take a look at it straight away on whether or not it can give us some opportunities for today, especially. So here we are looking at, if you're looking at Asian session and the European session, as you guys can see, it is confirming to us that the USD is indeed on the weak side. Okay, so we want to take a look at gold as well later on in relation to USD's weakness. And you can see that we have got some longer bars, especially for AUD USD. So AUD is more bullish. And then when it comes to the European session now, it's going to open European session very soon, especially with the London opening. And this here, you can actually see that you have got the AUD and NZD. On the Asian session as well, AUD and NZD seems to be quite strong, and that strength of the bulls for AUD and NZD have actually transferred to the European market as well. So that actually basically means that it transferred in terms of liquidity, but as you can see, it became bearish there for AUD and NZD. So are we expecting any sort of, what do you call that, correction as well? This is very important. So we know that we have market participation onto AUD, NZD and all that, but we have to be, we ourselves as trader, when we go onto the chart, we need to be very sure about the trend as well. So we want to go into different time frames and all that, but we just want to look at the market's trend at the moment, whether or not the USD is still going to be weak on all time frames or going to be a marathon, and how are we going to trade it for short term only, long term, anti-trend, trading in a range. All that, when we go onto the chart, we can then decide. But at this moment of time, we want to be aware of what's going on in the market as well before we go into the chart. So it is really important for you to know that, okay, you've got an emergency in Tokyo, in Osaka as well. So that is going to, cause a lot of volume in terms of yen participation as well. But direction is separate. Direction, when we go onto the market and we want to trade, we ourselves need to look at the direction of the trend at the time, because we want to trade at the time, you see. So but we need to be aware of the bigger news, and we need to be aware of FOMC having the what do you call that, announcement. We need to know what's going on in Japan a little bit, because these are all fuels. They are fuel for the direction, but the direction needs to be monitored from time to time. We can cannot be one direction lasting forever, right? Because it will be correction maybe, and then it will be pump up of it, and then falling a lot, and then will it still be a change of trend, or will it be change of trend, or a reversal only? So we don't bother about the direction that we see, but we want to look at where the investors and traders are going to be pumping in, what events are going to cause which pair. But in terms of direction, we have to do that analysis from time to time ourselves separately. So we cannot we cannot rely on trend direction that we hear in the market. So if we hear in the market like Bloomberg and all the big news, okay, it's dropping, that may actually be a long-term, short-term, or for that time, we don't know, but we need to confirm that ourselves of how to trade it following the big news. So the fuel can push it in any direction, but the fuel is important to know that we need to also ride along the trend at that time for whatever that the fuel is producing. Okay, so here, as you can see, the fuel at the moment of events or anything that's in the economic data is producing volume and participation for euro pairs. Right here, you can see that the volume is increasing. You can see the bar is increasing, especially for the buy of euro. Here, it was selling in the Asian session, not very active as you can see, but then now coming into the European session, a lot of buy. But then do we buy or not? We need to check that for ourselves when we get into the chart to look at where we need to actually buy. So what to participate on, we can look at it outside of the chart, the heat maps and everything else. But then when it comes to how do we trade it in terms of timing, then we will look at ourselves in terms of trend analysis using the charts. Okay, so the chart is like a measurement device. Where do you need to enter? How much you need to enter? How does it look like in terms of a big perspective, in terms of a pattern and all that kind of stuff. All right, so we can see that we've got euro. We want to monitor euro, of course. I will write it down, euro. We want to also monitor USD pairs as well, because we've got volume right there. As you can see, we don't want to look at pairs that has got loads of very small bars like this here. But we can see that the euro has actually really changed the participation, really changed the interest. So a lot of people are putting a lot of money now trading the euro, especially on the upside. So we will check and confirm as well. Here, for example, is a little bit of a mix right there. We've got some smaller candle, not very confident bars. We've got more confident bars, I think, here a little bit, here on the USD pairs, more on European pairs, right here, Euro pairs, also AUD pairs, but that was for the Asian session. When it came into the session here, it sort of reduce a little bit. Also the GBP, maybe they're still waiting. Maybe it's too early for the traders, investors. But we've got participation quite a lot on NZD pairs. As you can see here, the bars got longer, except for NZD versus the JPY. Okay, so you can see that there may be something that they are waiting for the Japanese yen, but we will confirm that. So let's go back. Let's go on to the action Forex as well. You guys got any questions? No questions. Okay. So on the action Forex heat map as well, we can actually see it. Let's say if I were to put it on a daily chart, on the daily, it's quite clear. You've got dark blue here, which basically means that the USD is really, really weak. So we can see that specifically onto the USD itself, USD versus Euro, very, very weak. But then we have seen that already, right? Onto the Forex early warning heat map that the Euro is picking up quite well. So we want to take a look at the Euro as well. As of fuel in terms of fundamentals, economic data, and everything else, we can see that being a Monday, it's quite an active Monday in terms of usually Mondays, you don't actually have high impact data releases, but the Monday last month of the week as well, we've got earnings and everything else together with that, we got US data. So in my expectation, we can actually expect more liquidity, more momentum and movement for the USD pair. So majors, we need to take a look at majors as well for sure. Okay, so here, for example, we can see that you have got the USD durable goods. Okay, durable goods. It's released by the US Census Bureau. It measures the cost of orders by manufacturers for durable goods. And then you have got the non-defense capital goods as well. Now, these two are actually quite important for the US, especially now because of the proposal of the taxes by Biden as well. And then you've got the coronavirus and you've got the yield. So all these, whether or not all these things that are happening are actually impacting the manufacturing non-defense capital goods as well as the durable goods in terms of their statistics, numbers, income, and everything else, is really important. So I would expect we've got movement for both Euro as well as the USD, because you have got ECB's Lane speech here, you've got another speech by Panetta here, you've got all these speech that will give some sort of essence to the media, and then that media will carry out the news for tomorrow's news on Euro as well. So I would think that the Euro USD would probably be good to look at in terms of opportunities, trend clarity as well. GBP USD may be good one as well, USD JPY as well. These are the majors. And as you can see, we have got BOJ monetary policy, and they are all very, very important. You've got the press conference, rate decision, and policy statement by Japan tomorrow. So that would then stir up everything again for yen as well. So we want to monitor that. We've got Canadian numbers coming out as well. So that will impact Canada. But I see that the USD JPY may actually be quite good to look at what's going on. Especially if you've got a rise in JPY because of the safe haven thing, and then we have got a fall of the USD. But let's monitor that and see how best to actually monitor that from the charts perspective. Then middle of the week, we see a lot of Australian numbers, high impact ones, especially for the Royal Bank of Australia, talking about CPI right there, and again, CPI numbers. So that's really important as well. Okay, so if I were to just very quickly before we go on to the charts, so today is 26 to 30, 26 to 30 right here. Let me just, sometimes you want to take a look at what had happened in the weekend, Saturday, Sunday, whether or not we had any news as well, data released. And this is Monday, so we have seen that. We've got your USD numbers. We stopped at Wednesday. So Wednesday, as you can see, it's a very busy, high impact news. We've also got the Fed monetary FOMC, the interest rate decision we've mentioned, and we've also got the ECB's Lagarde speech, very, very important as well, in Canada. So Wednesday, Tuesday night itself will impact a lot. And I think we can actually see quite a number of currencies movement, giving us opportunities starting from today actually, because it's starting to be very busy already with movements, as we can see in the heat maps as well. Thursday seemed to be quiet, even though we've got a very long list, but then in terms of high impact, we've got Euro, but potentially, again, it's the US. So I think major pairs would actually be very good this week. And then Friday, we are seeing the non-manufacturing for China. So for China, we want to also monitor Australia, New Zealand at the time, especially Thursday night onwards. And then we have got Euro as well. Okay, so that's very, very important. Then we've got more. We've also got the CHF right there as well. And then closing of the week and the day, we're seeing loads and loads of GDP numbers and all that for the Euro. So in summary, I think that we will have a lot of fuel, from the fundamentals and economic calendar to actually fuel market participation, volatility, especially, and liquidity, so that we can then ride along the trend that's given to us at that moment of time. So now it's the time for us to actually attack onto the chart. So on the chart, I know we've talked a lot about certain pairs, especially with different groups in different countries as well. But then Coincidentally, the interest has actually been last week on Australian crosses. Some have actually traded gold as well because of the rise up in gold, and also on GBP crosses, GBP JPY, GBP AUD, and then Euro JPY, Euro AUD, Euro NZD as well last week and all that. So right now, we want to pay some attention and look at what's happening with yen crosses, especially because that's where the big events are. We want to look at where big events are actually happening and whether or not their crosses could actually give us some hints on where we can actually scout for or actually look for opportunities. So we'll start off with AUD USD, AUD CHF as well as of last week, because we have got some interest in there, and we can actually expect some movements as well on these pairs, and this is one of the major pairs as well with the USD in it. Then we'll look into GBP USD because we've discussed that last week. We're going to look at where we stand with that. So we'll start off with AUD USD first, and I want to give you a little bit of hint of how it has actually gone on so far with AUD USD. Now, on the daily chart, as you guys can see, I have highlighted the buying power right there. I've also laid out on the daily chart the two levels right here, 7800 level, 77867 level as well. Give me a second, got some question here. Yes, we'll take a look at all the GBP crosses, especially against JPY, NZD, and AUD, no problems. JPY, we need to look at JPY crosses in general because of what's going on is quite big, and it has some close connection with the bonds in Japan, with the US, and they hedge it up quite a lot. So we need to look at JPY crosses for sure, including GBP, JPY. GBP, NZD for sure, GBP, NZD, AUD, and JPY. Okay. Yeah, these are pairs we need to take a look at. Let's look at the ones that we have talked about as well last week, and we may be looking into the pending order by especially for AUD USD. Now, AUD USD seem to have some impact onto bearishness of the dollar, right? So then the Australian dollar may look like having some form of momentum. But the thing about how we get quite confused sometimes with regards to the trend, especially with what's going on in the risk events and all that, I want to just give you a little bit of a tip where it might actually help clarify when you go onto your chart. When you go onto your chart, one of the nice tools to actually look at drawing a trend line on is actually the RSI. Now, the RSI, Relative Strength Index, most people are using it for the overbought, oversold. I've not used it like that for many, many years. But what I see quite interestingly simple to use the RSI is as though it is the line chart in a way. You can use it as though it is the line chart, and it's actually giving you quite good indication whether or not it's more on the downside, outside, depending on the time frame that you're looking at. So if you want to trade on the short term intraday, for example, a little bit of pips here and there, the RSI might help you to understand what sort of trend you are looking at for the shortest term as of now, in terms of where the direction is for now, not the overall trend, but the shortest term. So if we go on to insert indicators, and then you go on to the trend and you click, it's an oscillator, so you click on Relative Strength Index right there. The period is number 5, okay? So I know there's a lot of strategies out there and all that. I'm not using this as a strategy. I'm using this more as a trend indicator. I'm using an oscillator as a trend indicator, but I find it to be quite useful. So here, for example, as you can see, we've got all these blue line here. Now, you don't need to care about the 70 and the 30 and the overbought and oversold. We're not using it like that at all. All we are doing is actually to draw trend lines, okay? So it's very, very simple. If I were to increase this like this, gives you a little bit of an indication. Now, you can draw trend line from the peaks at the very top and the bottoms, the lows and the highs, right? Very, very simple. Now, at this moment of time, we're concentrating, focusing on the latest movement here. So if I were to connect the dot from this high to this high, you need a minimum of 2 points. If you've got 3 touch points, it's better, but 2 points is good enough to start off with. If you see only 1 touch point, then you don't need to do that trend line. So here, this is 1 trend line down, which basically gives us the indication that there is a possible upward movement or uptrend. Why? Because that blue line has actually broken out from a downward trend line. So if you draw a trend line like this from top to bottom, and that is basically you are drawing the trend line from all the resistance, then there's a break of these 2 resistance, right, which are the highs. That means you've got a break of the resistance, a break of the bearish points, and that means you are looking at potential trend to be on the upside for the time frame that you're looking at right now. And then if you do it this way, you touch point here all the way. Let's say I want to touch as many lows here. So I'll give you an example of what had happened, right? So now I've got first touch point here. This one now I'm drawing an upward trend from the lows, okay? From the lows, an upward trend, and I have 3 touch points on the blue line, right? 3, 1, got 2, and then you've got 3. Now, you don't need to draw it perfectly. So this has happened before. So when I look at this is uptrend, then I look at a break. I've got the line coming downwards. So that means there's a downtrend have actually begun. Okay, so here, let me now. Okay, so now if I draw a vertical line exactly on this area here, where it broke, okay, roughly, right? So there, that actually is actually a little bit there, which came directly onto a bearish candle. So you see, it does actually give you quite a good indication of what might happen next, okay, on that. So this is quite useful for us, especially if we use it just to know, what is the indication as of now. But of course, we've got all the other tools as well, like your heat maps and then your fundamentals and then the news and all that. You need to mix it all up just to add it onto your pair that you're looking at, whether or not it's really strong onto the upside. Okay, so now because it's picking up to the upside and there is a potential upward trend, we can then look into the ADX. The ADX is an indicator to tell us the strength of the trend. Earlier on, we just used the indication of the RSI, but the RSI needs to combine as well with these 3 lines. Don't forget the 3 lines. So 3 lines is telling you a bit on the sideways, stuff like that, but you got majority of candles above all the 3 lines, above the 8 EMA as well. So the bias is still upside bias, but it hasn't broken yet. So at least you know your direction as a trader for AUD USD, preferably upside. Not go and look into downside and then look at a single candle there and make your guesses. So at this moment of time, it looks like the bias is on the upside. So here, if I were to compare time frame as well, as you can see, candles above, all 3 lines above the 8 EMA as well, very high up. You compare 1 hour with the 4 hour, it's giving you the indication is up again. And then you go into the daily chart, indication up again. Then you put your RSI just to draw the trend line, it's up again. Then you know your direction should be, whether it is short-term, intraday, scalping, upward, for the long term, it should be on the upside. AUD versus USD, upside. So then you know it's buy trend. Okay, so if you are riding the trend this way, even though it's short term or scalping or whatever intraday, then you are on a safer side. You don't get trapped too much when you are actually trading this way. Okay, so this is where you can then put other ingredients like ABCD pattern on it, and then just to confirm whether or not it can actually reach that area. So now, for example, we know that if it is actually approaching areas of resistance, and these areas of resistance, when you look to the right as well, it is really close to the 7800 psychological number. This is AUD USD we're talking about on the daily chart. So it does not matter anymore whether you're trading on an intraday and you need to look at the shorter time frame. No, we are looking at the daily chart because it's got clearest data. How you trade it short term and all that depends on the pips, actually depends on how much pips and your entry as well. But we don't need to worry about that because we want to look at the momentum. We want to look at whether or not there is strength or not at this moment of time on the daily chart as well. Since we're looking at the daily chart, if you want to know the strength, you need to click on average directional movement index right here. This is called the ADX. Okay, you don't need to change anything in terms of parameters. Leave it at 14. Don't need to change anything. Apply to close as default settings. So when you click on that, then you can see that you have got the blue line. Now you see the blue line is telling you that the trend that you're looking at, if the trend is downtrend, the blue line is still need to be above the 25. So whatever trend you're looking at, as long as the blue line is above the level 25, that means you've got strength in that trend. You've got interest already, you've got a trend, but then you need to also know whether you've got the strength. If you've got the strength, that means you don't need to wait too long. Okay, that means it won't go into sideways later on and then go up, for example. It wouldn't be that slow. So here, for example, but still it is a lagging indicator, just giving us a bit of hint. So here, if I were to go back to the 4-hour chart, on the 4-hour chart is just picking up the strength of the upside movement, okay? Then the daily chart, for example, is already giving us hint that yes, there is a bit of a momentum picking up. It's quite strong already, the uptrend, okay? If I go on to the weekly chart, it's still above the 25 level, but this looks quite good because the way that blue line moves as well looks like it's picking up. It looks like it's got strength for the AUD USD. So now we know that we have got the 7800 area here with resistance and all that. So obviously we cannot trade the 7800. So we're going to do a pending order. You do a pending order on a buy at this area right here because you have got some momentum here, okay, of a single bullish mother candle. And we want to buy anywhere above 7800. So this is the signal 7800 and above. So 7810 to buy. Okay, AUD USD to buy only if it actually triggers 7800 and above. So 7810 would be good because it's 10 pips above psychological number. For those who are a bit more reserved, you want to look at 7830. But then if you take it 7830, maybe not that good with the maybe it gets less as well with this area right here in terms of exiting, because I'm measuring the length of the candle right there. So if you were to buy at 7800, you need to also look at the 7850 area. Okay, so 7850 is your closest psychological level. So I want to lay that one out right there. Okay, so you've got 7850. So obviously, if you are taking, let me put the line of entry green in color, 7810. Let's say you are buying. Okay, 7810. I'll change that to green in terms of your entry. Second. So you want to buy at 7810, right? So that basically means that if you want to buy at 7810, you need to exit way before 7850, 10 pips under, so 7840. So you're looking at making about 30 pips or so. So 30 pips or so is a good amount at this stage as well, so that you can double up your stop loss to be at least 60 pips, not 30 pips. 30 pips because this is quite a volatile market and you are trading in volatile times. So maybe your stop loss gets hit if you put it only at 30 pips, 20 pips, okay? So it's better to extend that to about 30 pips double. That means 60 pips, 70 pips or so, just to give it a little bit of range. So you need to ask yourself the question, are you willing to take this trade with a 30 pips potential in terms of profit, but double that in terms of your stop loss? If you say yes, then you take this trade, okay? Because you need to understand that it needs to cover the question of your own meaning your personal risk appetite. Are you willing to lose that 60 to 70 pips, and how much are you willing to lose depends on your value per pip. So per pip, if you want to trade at $1, are you willing to lose? Don't look at the profit. The profit things, if you the profit will come automatically if you take care of your risk first, because your risk is what's going to pull you all down if you have no stop loss as well. If you just hope and think, oh, it might, or you guess and say it will go up and all that kind of thing, it's better not to do that. So it's just purely logical, looking at your chart. This is what the market could potentially give you. So you want to take the least, and it could give you 30 pips because of all the relevant things there, because of the volume up, strength and stuff like that. But this is what the market could potentially give you. So we cannot guess and say, it will go up and things like that. We don't know that. So I don't know that either. So what I know is that these are the checklists. These are the things that we can expect, but then your stop loss has to be doubled at 30 pips that might be given here. Okay. And then if it is actually going to be on the upward side of it more, we will look at that later on. And it does depend on what happens in the news, happens on the data, positive data and all that. But as of now, this is basically it. So the other thing we can actually do is that we've already know, okay, the trend, we can use the RSI to look at the trend line on the RSI, like it is a line chart. We can use the ADX to tell you about the strength. And another thing that you can actually do is to use the stochastic to tell you whether there is a reversal right now. So to tell you whether or not, instead of going up, would it actually come down first? Reversal first. So then you can set your pending order. You don't need to look at the chart 24 hours and hope and blow wind and think that it might actually go up. We don't need to do that. You can do all your other things as well. So what we can then do is go on to insert indicators. Under oscillator, it's an oscillator as well. Just go on to stochastics. Go on stochastics and don't change anything, just as default, click on OK. What we want to do is we want to see whether or not there is divergence, okay? So whether there's divergence, that's really important. So here, for example, this is on its way up at the moment. If there is a divergence, that means there is a reversal coming down first, okay? So here, for example, as what I can actually see, you have got this area resistant here, some resistance there, resistance. You've got about 3 to 4 very accurate touch points for resistance, which basically means it has the potential to also come down, but it shouldn't worry you so much because 7, 8, 10 is your area. But if you want to be a little bit safer, you can actually you can actually put your pending order at 7, 8, 15, 7, 8, 17, like that kind of thing. Okay, just so that you pass that through a little bit, because sometimes it may actually trigger and then come down first. So whether or not it will come down or not, that's what we're looking at right now on the divergence. So here, for example, first you look at the highs, okay? So this high is for this high is for this high. Now you can see that this is a higher high, okay? And this one here is a higher high. Okay, this is one, no divergence because they match. One is a slope up, the other one is also a slope going upwards. So no divergence, it's only convergence at this stage. What about this one here? This mirrors this area right here, the low, okay? This is the low, this is the low. This is the current price low roughly right here. And this is the current price right there. But look at the low, this low here, okay? And this low here. This is a higher low, so the slope is up. But this is a lower low. So that means be careful. Don't get too confident right now to buy. May not be the timing for buying because there may be a bit of divergence going on here, okay, between these lows right there. So this lows divergence does actually match a little bit with resistance at the moment, which are all these area right here. If you look at the price as well, I mean, you've got the 7800 area matching with all this resistance area as well, very close to all the resistance areas. So it looks like there is a block. There is a block at the moment at the very top for AUD USD. So is it good time to buy? No. Pending order, maybe put it a little bit higher, just to see whether, if, for example, something happens in the news suddenly and then it comes down, for example, but then it's got more positive news, then boom, it will push up on its own. So you want to catch that as well, actually, right? But then as it goes up here and find resistance and start to come down, you can actually ride the downtrend side of it, but then put the pending order buy as well, because overall trend is still on the buy side. Maybe now it's correction time. Now, as it goes up here and it come down, we have got that long candle right here. We have got some here. We've got some here, all this bearish candle. But in my opinion, it may actually go up and then find a little bit of resistance to trick the market a little bit. And it might not be able to go down too much at the moment. If you look at the market on the left, you see that the bearish mother candles is lower. All these big ones is lower. They didn't start from here. Okay, you got smaller one that start from here, which basically tells you that there may be potential for a sell when the price reach there, but not too much selling, some selling, not too much selling. But if the price has gone down lower, then you've got bigger selling. Okay, so that is basically it for AUD USD. So just so that we have more time, let me quickly go on to the other pairs as well. Now we're looking at AUD CHF as well. Now, AUD CHF is picking up very nicely at this moment of time, but again, it's almost the same. I would need it to go past 7120 area so that you can actually buy your AUD versus your CHF at 7130 only, because the bearish, the bullish candles starts off above as well, but then not too much buying as well because of the length of the mother candle is not really long. So I would think that if it does break up 7120 area, you can put a pending order at 7130 and then do the perhaps short pips as well. And I think 7130, 7160 area, something like that, for you to actually take profit. Also short term, because now I see that there is potential for AUD crosses to go up, burst a little bit, but not a full-blown uptrend to the upside. So this is just a little bit of buying you can do. But again, be careful with it and look at all the resistance that's going on here as well. There's too many resistance at this area with all these wicks. So that means it will create a block to the upside here. So you've got a little bit, but not too much buying. Okay, so that's for AUD CHF. So now let's get to the, it was the GBP JPY, GBP AUD, and GBP NZD, I think, right? So is that correct? Let me just check. Yes, okay, good. So let's take a look at GBP. We have got GBP JPY right here. Okay, let's take a look at GBP JPY. But just before that, a bit of an idea here. Now, if we look at the heat map here, GBP crosses looks like a lot of buying now. Okay, a lot of uptrend participation for the GBP. So let's combine this one now, GBP JPY, with a chart that we can see. Now I've drawn in advance the trend line right here. This is again on the daily chart. If we were to get rid of all this here, start off with a nice clean chart, so we can see how fast we can actually reanalyze it from a technical perspective. Daily chart, very simple. Daily chart is giving you that rise very, very clearly, that rise of trend, uptrend, very clear. The three lines, EMA, 200 EMA, 100 EMA, 50 is all showing you on the upside. And then you see this candle right here. It's all above all the three lines, but I think it would actually pick up much more, go on an uptrend after it gone over and above the EMA number 8. The EMA number 8, exponential moving average number 8, is the closest I can see to the price. The way it moves is very nicely done with the price action, okay, with the candles. So it's quite good. So if it goes above the EMA 8 as well, it is picking up at the moment, and it looks like you are biased to the upside, okay, for an uptrend for GBP JPY. But let's start a little bit with a 30-minute chart to see what's the story like. So you can see that it struggled and it gone upwards, but it's still trading in between all the three lines, okay, in the 30-minute chart. As you compare it with a 1-hour chart, it's sort of gone a bit lower, but you've got some bullish participation there. You go to the 4-hour chart, not very clear again, goes down, goes upwards, and then from the visual of the EMAs and all that, to get more clarity, perhaps what we can do is we get our RSI out. So we get the RSI out and we draw a trend line onto the RSI, okay, just to get a bit of an idea, okay. When we know the trend a little bit, what could likely happen, and then we measure the strength of the trend, the ADX. So here, for example, here we are looking at trend going upwards right here. We can see that on the RSI as well, that it's clearer and better to draw a trend line like this, okay, upwards, 2 touch points. It shows strength to the upside. It does not have any cuts for it to find any resistance on the trend line here as well. There's nothing to draw from here and then many touch points resistant and show that this is resistant as well or approaching resistance. So it looks okay so far on the upside. Okay, so if I were to go on to the daily chart, okay, on the daily chart, if I look at the peaks here, or even if you want to draw from there all the way down, if you draw it like this, you only got 1 touch point, 2 touch point there, 2 touch points there. So it doesn't make any difference. You draw from here down this way, okay, on the resistance side of it, which basically means that you can even draw your triangle and anything else here on your RSI itself, okay? So this means that it has room to go up until that trend line there. So this may have room, but until it goes above the psychological level as well, because 14991, it's only steps away, pips away from the 150 psychological number anyway, right? So this is for GBP JPY. So there we go. So 150.60 onwards is your buying price. So 150.60 would be better. So it does actually show me that, yes, it has to go above the EMA 8 as well. Then it gives you some idea, you know, that it might be good to buy at the 150.60 onwards, okay? But the problem is I don't see very strong candles. I mean, in terms of bullish candle. So if it does trigger your buy, then you are looking at very limited take profit, let's say on that mother candle right there, which basically mirrors the resistance as well, but it is at 151.20. So 151.21, which is very close to the 151.20 area. So in my opinion, what you can actually do is you can take the 30 pips maybe buy at 150.60, okay, for GBP JPY, do pending order buy, and then your take profit exit price should be 30 pips, 150.90, okay? So again, your stop loss, you need to double that, 60, 70 pips. You can actually make 30 pips, $30 and all that, but you need to be willing to risk about 60, 70 pips. So you can trade that again, the same as the other ones, $1 per pip. Okay, so looking at $30, and you need to have that in mind. If you were to lose this trade, you would lose $60, $70. Okay, are you willing to do that? So that's the most important thing. Now, you know the trend already roughly. You know that you've got some room. You want to know as well, does this pair has got the strength of that current uptrend? Is there strength? Is there a trend strength at the moment? Okay, you can see that it's picking up. Once it goes above the 150 and above, it would most probably be able to ride along this mother candle right here, right? So that mother candle there is worth, from here right up there, is worth about 120 plus pips, okay? But then we want to take it slow in stages. So your buying price should be 150.60, take profit 150.90. Then you see how it goes. The only problem is that I need it to go above, and then you can ride along that candle, provided it has gone above the EMA 8 as well. That means it has gone over all the 4 EMA lines, which is much better. And then look at what news is approaching and stuff like that, because we need to also look at that area. So above one, because the market is just giving us that area there to get out from, you see. So we cannot think that it will go far beyond that. So we do have some buying opportunity for GBP JPY, but as I said, the shortest term pending order buy is at 150.60, and then you take profit 150.90. Okay, so there you go. So now overall, very nice on the upside, but we want more movement to go above the EMA 8 as well and enter and trigger 150.60. Then we can take that buying opportunity right there, because the rest, you know, looks a little bit wishy-washy. So it wouldn't actually be too much on the uptrend, I think, moving forward, because you've got limited bullish candle here. But if it does go up and then find resistance, comes back down under the 150.50, we have loads of bearish candle. We've got bearish candles there starting at the 150.50 area. So maybe it's just waiting to come into this area where all the bearish sharks are actually swimming here. We don't see bullish sharks swimming above. So, you know, from the most recent, we got one here, you know, then we got another one here, and then not very many anymore from how the eyes could actually see. And as you can see, bearish again. We've got one, but higher. We've got the bullish candle, but higher. So upon breakout, not really much to the upside. Very limited at this moment of time. But if it does go up and then start to come down and then driven by some bearish movement, then I think it will actually fall much faster. You've got one very nice big one there as well. So you're going to be very, very careful. Okay, then you've got a lot of sharks swimming here, a lot of bearish sharks swimming all over this area. So as you come down, approach the zones of the sharks, they'll come down even more. So I would think that the GBP JPY would actually fall much more than it would actually rise. It would rise a little bit as it is actually rising right now as well. If you see the 4-hour chart, you can see that it's trying to get that, but then it might weaken the momentum. So hence the reason you might have some, but not much. But it needs to go to that area first. It needs to go above the 150. Maybe it'll start to turn down straight away. So is there a reversal as well? Then you, to answer that question, for example, then you take your oscillator, stochastic again, and then look at this and see. You've got the highs there. You've got that high there, current price. This one here is sloping downwards, but not too much slope. Then you look at this area here, that mirrors this. This is up and this one is down. So yes, you do have some what do you call that, divergence. This one here, as it gets higher a little bit, there will be the same level. If it's the same level, then the divergence is there. For now, it's a slight downward slope. No divergence on the highs, but there is divergence on the lows right here. So watch out. There may be a bit of a reversal happening quite soon before you can see the upward type movement. So this is where you want to monitor. You look at the 4-hour chart, you go onto the daily chart, you look to the left as well. Look to the left. You've got an area where it could actually just come down. It's opening price of that mother candle there, opening price of the mother candle there as well. That's a resistance point right there. So my guess is it could start to, it will go up a little bit more, perhaps, but then it'll start to weaken at the 150.50, because you see that closing price there is 150. 150.41, and then if it does go up even a little bit more, it's 150.86 right there. So 150.50, if it doesn't go down in that area, it wants to go up a little bit more, then it will start to weaken at 150.80 anyway. Okay, so that's for GBP JPY. We'll go on to GBP AUD. Just a second, GBP AUD. So GBP AUD, we've got that very nice run 1-2 weeks ago on the buy as well, on the sell way before that. So now it is time for us to clear out all these drawings here and start afresh and look at what GBP AUD has to offer for us at this moment of time. I'm looking at the daily chart right now. It doesn't look that clear in terms of trend. You got like a sideways thing going on. A lot of people who just learn the pattern, they will go straight away, get very excited. They go A, B, C, okay, market's going to come down. So we don't know that. What we need to do though is we see where the leaning towards is. We compare your 1-hour time frame. We see that it's on a downward type bias, candles under lower highs, lower lows. We need it to come under here, obviously, to create more lower lows. You go to the 4-hour chart, bias still on the downside, candles under all the 3 lines, but the 3 lines, EMA, 50, 100, 200, is not giving you clarity of the trend. It's just the candles that are under. Then you go on the daily chart. You see the same thing, very uncertain market. Okay, then you go to the weekly, again, more and more uncertainty for GBP AUD. So what we then do is that we can actually use the help of the RSI to draw the trend line as well. Go to oscillators, go to RSI, relative strength index. Period is 5, yeah. Then you can see that this is what's going on. So we go on to that. Now you've got some touch points at the top here. Okay, so some touch points here. Okay, you've got 3 touch points there. Okay, if you draw from here, you've got 3 touch points. Very nice. So what is telling me that if I draw at the tops from the highs, it's telling me that there is a breakout to the upside. So there may be a short-term breakout to the upside, but maybe limited. Maybe how much limited? We look to the left, look at the most bearish, longest mother candle, bullish mother candle. You can see there is a limit on the closing price right there. Now, the closing price of that mother candle, maybe it want to go up, but it will go up only until there, and then gets caught up in all the resistant area where all the EMA lines are as well. All the resistant, some support may become resistant here as well. So we're looking at the price that is 79.58, let's say, very close to 79.50 psychological number. So I'll adjust that price to the psychological number of 50, 79.50, right? So that also tells me that if I want to actually buy, look at some short-term buying going on, let's say I go onto the 1-hour chart, I can see that it's not very convincing that there may be a buy, but maybe there's a burst of some buying thing going on. We don't know that yet. But from the 4-hour, we can see this is roughly what could happen, but then limit it at 7,940. But this is risky, okay? Because you don't, if you see that the lines are 3 EMAs and then you compare with one time frame and another time frame, the clearer it is, the better. Then you don't get trapped. But if you are taking that trade, like how we are looking at it now, even when there is like very unclear trend, that means you're taking the risk. You're taking a higher risk as well. So, but the thing is that if you are looking at buying and then smaller pips, like 20, 30 pips, then okay, it's still reasonable, but it's just a question of your SL, your stop loss has to be double that. Are you willing to go for that trade with that much pip, like 30 pips, but then you have to risk higher on your stop loss and in a very unclear market. If it is a clearer market, then your risk is slightly lower, your probability is slightly higher. Still, your stop loss is actually higher than your profit, but you are in a less risky market. But here you are in a very risky market. Okay, so there you go. I hope the RSI has been a little bit clearer for you guys as well. And if we go on to the daily chart, you see the RSI here. You can see that on the daily chart, it's a different picture. Okay, it's on the downside, for the longer term downside. So now you know that yes, you can pick up very little on the upside, but overall, it's favoring the downside. Okay, that is for GBP AUD. Okay, and you can see quite clearly as well, you've got too much border at the very top as resistance. So that's for GBP AUD. I hope that's clear. And we'll move on to the GBP NZD being our last pair that we'll be looking at in a second. Okay, this one here, I think we can forget for now, but I'll leave the drawings on for CHF JPY. Let's replace that with GBP NZD. All right, there we go. So GBP NZD, you can start off again. This is the 4-hour chart. On the daily chart, again, it's not clear with the trend, especially as with the 3 lines and all that, it's just looking not very nice. I like to see when you've got more time frames having nice 3 EMAs either up or down, then you confirm that with the RSI again, then you've got a nice trade. Then you look at the ADX as well, how strong the trend is, and then you trade accordingly. But then here straight away you can see it's very wishy-washy, not very clear in terms of trend for us. In terms of trend, not very nice. We've got one nice bullish candle that's way higher here. Okay, so that is higher in terms of, that means the bigger traders and all that have pushed the price there, but they were committed to the 1.9354 area and above. So above the 1.99350 psychological number, then you might have some participation. But again, because of the trend is very unclear, because of the 3 EMA lines and all that, it's very unclear. It might burst up, trick traders, and then come down around here. Why? Because this is where you've got that resistance there as well. Okay, so again, maybe very, very short term. I will take the closing opening of the bearish candle right there, and that mirrors that candle there. So I push this one down a little bit. Look at the price, 94.20 exactly. So 94.20 is your psychological number as well. So that actually means even though it breaks out here at 93.60, let's say 10 pips above 93.50 area, then you can see some limit there. So you need to exit at 94.10, right? So I say that it's 94.10 right here, 0. Okay. And you see that that's your limit right there. And then 93.60 is your buying price. Okay. In the short term, I mean, I would actually take it at 1.9390 as my take profit. So 30 pips, 93.60 buy, 93.90 exit. So, and I wouldn't probably look into leaving it longer and and touched 94.10 only because 94.00 is quite a strong area of resistance and psychological level as well, because you've got all these wicks right there. So again, it mirrors the other pairs as well, where you can choose to take, maybe to have a pending order done at 93.60 and then take profit at 1.9390. Then you stop loss again, same thing. You need to double that to at least 60-70 pips stop loss, and you need to ask yourself, you're willing to take that, and how much you're willing to lose in terms of your pips USD per pip as well. $1 ideally, 50 cents or $1 per pip to lose, or willingness to actually risk that trade at $60 to $70. Okay, to make to look at whether there's a chance to make 30 pips or $30. So there you go. That's basically it. But in my opinion, it looks very tricky. There is always some sort of upward type movement potentially as a reversal type thing, but overall it looks quite downward bound to the downside. So how do we actually get a little bit of clarity? You go onto your RSI again. So, and you can see that if on the 4-hour chart, you've got quite a lot of touch points on the top side, the resistance side, right? The highs, right? You've got top touch point there, for example, and it broken out from the touch points, the resistance area. So it's showing that yes, some movement to the upside. Okay, it's also given hints from that bullish candle right there that is going up as well. And you've got higher highs, lower lows, and lower highs, but then that might actually break that out. You can also draw your trend line there, extend that. Got some touch points from the body there. Then wick right there. I pull this one low a little bit. Okay, then if I pull that side lower, you've got touch point again, touch point, some more touch points. So that's quite a good one. So there you go. So it needs to break out from there, maybe come down a little bit and then continue. So if it does do that, then break out from that trend line, then you can have a chance for it to enter this area, this bullish trap here. Okay, so 93.60 buy, 94.10 exit, but 93.90 would probably be preferable for me to actually sell, to actually exit the market there after buying it there. Now, we've also got a bearish candle here. That one, exactly 93.90. So you see, if it does go up here, 93.60, look at where it has opened up for a bearish candle right there is 93.90 right there. So you can actually reverse there too, or here, but preferably there. Okay, so there you go. So that's for GBP and ZD. Okay, I hope that's clear for you guys. And basically, this is all I have for you guys for today. Any questions so far before we end the session? You guys okay? No questions? Okay, guys, so I'll end the session for today. I would like to thank you guys for attending my webinar today, Monday's Week Ahead webinar by Bretton Financial Trading Academy. And our goal, yes, that's it is until you see the US, how the US has given you the trend. If you look at your USD pairs giving you a lot of trend, and then you will automatically see that the clarity of the trend for the USD pairs are also on the goal. So if we look at the goal at the moment, I'll just get rid of all these drawings here. It's getting less, I wouldn't say risky, it's got more opportunity, more clarity, I think, I suspect, for this week for gold. So it would be much better, I think, because I wanted to avoid trading gold, especially with the Texas announcement and all of the surprises that came out from the US. Yeah. So here, for example, if we look at the daily chart, it is trapped in within the 3 lines at the moment. But if I draw this from the bottom touch line, it looks like it's favoring the downside for gold at this moment of time. And you can see that you have got lower highs. Here, basically, it went upwards, but now this area here got caught up. And if you look left, it's created a very strong area of resistance. That is the opening price of that bearish candle right there. Then if I put it here as well at the highest body, you can see support. You can see support here, became resistant and all that. Then I want to trap the highest wick as well, just so that you got that zone. So it is way under that zone. It's trapped under that what do you call that, under the trap in within the 3 EMA lines as well. Okay, so what I would suspect it do is that if it does actually go a little bit lower, let's say at the closing price here of this candle, which is opening price of that bearish candle, then it can actually go down from 1770.54 right down to this area here. Okay, or if it prefers to actually go earlier, to reverse earlier, then it would probably reverse from this resistance that becomes support here. So I think we need to wait till price come down a little bit. I would prefer for it to come lower and come under that red line. Then it comes lower and it's got more chance for it to hit 1745 at least. But starting from 1770, let's say 1770.50 and under. Okay, so 17.7050, let's say you are selling your gold, and then your exit would be 1745. That's for the sell side of it, but it's biased to the downside as what I can see at the moment. And it's also trapped in the weekly chart as well. You've got the gap or the zone between the 50 EMA and the 100 EMA right here. And that is strong support that is this way. Maybe take it a bit higher. And then you've got support area there. Okay, so basically you're trading in between the black zones there, the black sea zones there. Okay. There you go. Maybe this is clearer here. There you go. So once it goes under 1770 onwards, 1770 to sell, and then it might find support here. I'm not sure what it will do there. And then if it does come lower here, it may be supported by some bearish mother candles as well, and then come down. But I think if it does come down here, it might actually reverse a bit earlier at this area here, closing price of mother candle here, which mirrors closing price mother candle there. So you want to perhaps be careful with that. This is your next support area, let's say. But here, yeah, you want to be really careful here. Okay. So finding support here, only after it comes down and breaks these two lines, then you can see more selling and then support here. So you've got one area of selling right here, selling zone, another one after it crosses that two support area right there, and then come down. Then it goes through the support area, then come down again. So that's basically your route map. But as of now, you want to sell only at 1770.50. Take profit 1745.65, let's say. Okay, that's for now kind of trade. But then we can't see anything at this moment of time. So it does actually get triggered from the fundamental side of it, the news and the data for the US. And once that happens, then it would actually create the momentum for gold as well. Okay. All right, guys, I hope that's clear, and that's all I have for you guys. So I would like to say thank you once again for your time, and we'll catch up again on Wednesday. Wednesday's midweek review of the market. Okay, so once again, thank you. Have a great pipping week, and we'll see you again on Wednesday. Take care. Bye-bye.